Hello and welcome to the CFA Society Finland's webinar Macro Markets 2021. My name is Harri Kojonen and I'm a member of the board of CFA Society Finland, and I'm really glad to have here three guests, Lippo, Heidi, Valtteri, which are often seen on Finnish media talking of lots of different things. I'm going to do a quick introduction here. Lippo, Suominen, next to me, Chief Investment Strategist at S-Bank and FIM Asset Management here in Helsinki. Then we have Heidi Schauman over there, Chief Economist at Swedbank Finland.
Hello.
And then Valtteri Ahti here, who heads macro fixed income and currencies research at Danske Bank in Finland. And just a note to the viewers, this event will be recorded, so there will be a chance to watch it afterwards and hopefully also listen it as podcast later. Viewers will also have a chance to post questions. I will be seeing them on this iPad here, and I will be asking the guests questions if and when they suit the flow of discussion. But feel free, don't be shy. Your name won't be seen on screen anyway. I was thinking of talking of first of macro and markets specific things, and then later in the webinar to move on to the more sort of soft topics. CFA Society Finland promotes professional development, for example, among other things, and that's something that I would like to discuss with you. How do you sort of keep your development, your professional level with high standards? But let's start with the macro topics, and I was first thinking of asking you, and let's start with Heidi, that if you want to ask first, that how optimistic or pessimistic you are what comes to the global economy this year, 2021. There's been a huge pandemic last year, which is still continuing, but how optimistic are you? Are we going to get through? And if we are, how soon, how forcefully?
I believe we're going to get through. We always get through in one way or the other, but I would say baseline, quite optimistic, and I think that's quite common right now. We have gotten some of the big question marks put behind us, Brexit, the American presidential election, even though we see uncertainty there, and then we have the vaccine that is now rolled out. So quite high probability that we're actually going to see quite a strong recovery in 2021. But at the same time, we have the same risks as we had before the pandemic, but they have just become bigger. And then I'm talking about the risk of bankruptcies and non-performing loans for banks in continental Europe, especially. If we look at debt, we were worried about the global debt levels before the pandemic. Well, now we're taking a giant jump upwards. Then we have political uncertainty. We have Angela Merkel leaving. What will that mean for Europe? That's not clear. And then all the problems related to low productivity growth, inflation. There's such a bunch of questions.
That doesn't sound very optimistic.
Exactly. But they are the risks that we have learned to live with.
Yeah.
5 years ago, I thought that is it possible for us to always have like exceptional times? I think we're going to go back to that. It's not going to be the normal we had before the financial crisis, but we're still going to have high risk all the time, even though we don't have a pandemic in the way that we have right now.
What do you think of geographical differences, that the pandemic is still ongoing problem, say in US, in Europe, many other places, but in Asia it's been sort of they've been managing way better. So I mean, could the lead to the global growth come from Asia instead of US? Usually the growth starts in US. It's the motor of the global economy. That do you see any differences between, say, Europe, Asia, US, what comes to prospects for growth this year?
Right now, it looks as if China is an early mover in the recovery if the situation continues the way it is, and it might go that way. But then if we look at the broader picture, they might have a head start, but still the US will dominate going forward. But at the same time, we see Asia becoming more and more important for the global economy. But what's sure is that Europe will lag, especially continental Europe. There we have the Nordics actually having done better during 2020, probably doing better also in 2021 than the rest of Europe. And that's, of course, something to cherish for us.
Now, what about Lippo? Are you as pessimistic what comes to Europe? Because, I mean, working in financial markets, I've been here for 25 years, and I think everyone's been bearish on Europe or this quarter
and for good reason.
For a good reason, yeah, perhaps.
Yeah, that's, of course, very difficult because it seems that Europe is lacking every time. And also now it's very difficult to be very positive on Europe. Of course, we are also bumping up from the crash that we saw last year. But if there is strong consensus that this year will be good for overall growth, there's also strong consensus that Europe is not really recovering permanently. It's just coming up. This will be a good year. And then next year we are facing all the problems that Heidi mentioned here earlier. So unfortunately, we have to discuss whether China is leading the growth or US, but never Europe.
No, what do you think? Which one will be leading this year? Will it be more like Asia or US?
Well, of course, China also already jumped last year back to growth pretty fast, as they had also less problems with the COVID overall. So this year it could be that US is kind of contributing more from that point of view, that okay, they are picking up more. But looking from longer perspective, one more thing that this Corona COVID is strengthening is the kind of change of global leadership from US to China. Of course, we know political problems that we are facing in the US, but overall, I'm pretty positive on China from longer term perspective, and it is now getting even more and more clear that okay, they are the ones that will lead overall going forward. Whether it is already this year, it's more difficult to say.
Yeah, we'll see that. I mean, they have a population that I think is pretty much the same as in US, Europe and Japan combined. So yeah, I guess so. But on the other hand, Japan was in the same state, so everyone thought of that back in 80s. They will conquer the world. It didn't happen. What about Valtteri? What do you think of the global growth? Are you pessimistic? I'm not quite sure where you're pessimistic or optimistic.
No, I'm Heidi for that matter either.
Yeah, exactly.
Well, yeah. Too many economists in the same room.
Sorry, so you are optimistic or pessimistic?
No, Valtteri, you will be the only one who says if you are...
Fine, so I'm optimistic.
Yeah.
Let's let it out there. I mean, well, yeah. So I mean, it's pretty much. I mean, I agree with my dear colleagues here about most of the things. I think there's also one thing I was thinking about while you were all talking about who would lead. I'm not sure if it really matters, like the sort of who is the first sort of economy on the business cycle
path. From the investment point of view.
But I mean, in terms of, and also if you look at growth rates, what explains a lot of the difference is actually population growth, right? So I think it'd be ridiculous sort of think that Europe could match, let's say, the US, since population growth rates are about 1% lower, percentage point lower. So in terms of per capita, actually Europe isn't that far. And if you look at real GDP per capita, for example, Japan, even though the headline figures look terrible, so no progress in 20 years or more. But if you look at per capita real growth, then actually Japan isn't that bad. Debt is a different story, obviously, in Japan. So I'm just saying we have to be careful about what we're talking about. If you think about living standards, then I think basically the entire developed world is moving as it should, right? So we're responding to and what Heidi talked about. So the two drivers of long run growth are productivity and demographics, right? So you can explain those things. So it's like, how many workers do you have and how productive are they? So productivity rates are quite similar in developed countries. So you can explain these differences in growth rates really by population growth, and we just aren't procreating in Europe. So it's kind of
subscribe to the Japanification of Europe then in that respect, that what comes to the population.
In other respects as well, yeah. So there's a lot of, I think we're closest. Yeah, demography here is, so I think that is actually maybe the most interesting question, but it's not it's not an outlook question. It's not a question for this, but longer this whole like secular stagnation story where. But if you recently read this, for example, what's his name? This economist who just published has this thesis about how actually it'll be different about demography because when populations get older.
Goodhart?
Yeah, there you go. Goodhart. Thank you. So. The question is quite open. Actually.
That's a longer term story, but I mean, I'm not quite sure if I interpret you right, but you are positive. But are you positive enough that, I mean, there was a huge dip in growth in Europe and elsewhere. Now we are bouncing back, which is quite sort of a normal thing to happen. But the level where we are going to bounce, then that will it just be at the same level that we were before, or do we even get up to that level, or will we go over? Because now there is this huge support for economy on many fronts. That can it give sort of a huge, because that would be really out of consensus that there will be extremely strong growth next 3 years.
For this year, yes, there will be.
Yeah, of course, but that's a bounce back, isn't it?
But longer term, it is very difficult.
Yeah.
Because there has to be some cost from this pandemic. It can't be that easy that we have huge problems and then we just take on more debt and then everything continues as it used to be. Too easy.
There is a potential upside if this pandemic has led to companies becoming more efficient, making new innovations, renewing their processes, which many companies have done. But we don't know, will that lead to higher productivity? But possibly it will in some countries, somewhere. But we will see that in a year or two, right? Or 5 years maybe. But we might have seen this kind of transformation that you're just, when you're in really tough spot, that's when you make the big changes. So that might help us a little bit forward, but productivity has been the big challenge 10 years back for almost all Western countries.
Yeah, not just 10 years. So basically, ever since World War II, we've seen diminishing productivity growth, right? So that's, and I think that really, we don't need to get into that longer discussion, but I think, so actually, I don't think it's that surprising. So I think most houses are basically forecasting. So after we like come back from the bounces occurred, that what is the potential rate of growth after that? It's basically what it was before, and I think that's actually quite correct. So
basically we would return to normality.
It's like Heidi said, like we'll have the same old problems, the same old world. We'll all be like wondering like, what's going to happen in the long run growth. Equities are expensive, blah blah blah. But I think, in a way, this whole corona crisis has been quite cosmetic in the sense it didn't change any structures. So there'll be some productivity gains perhaps, but these are really like second order effects.
Although there are some people that claim that, for example, working from home will be in future way bigger than it ever was and so forth. But there are three major supportive factors for economy and asset prices currently. Super low interest rates, ongoing quantitative easing, and latest the widely increased fiscal support, or should I say wildly increased fiscal support. Because economy obviously affects everyone, man on the street, everyone. Do you think that this helps the real economy? Heidi, this probably would be specifically your turf, that I mean, say QE, for example, all these measures, fiscal support might be a different story, but say super low rates, quantitative easing, does it really help real economy?
It does through companies and through the fact that households have more money to spend on something else, but going from super low to even more super low, I think the marginal effects are minimal, and I think central banks are very much aware of that, and that's also why the Swedish Riksbank, for instance, wanted to go back to zero, because there are also so many negative effects, not to the real economy, but to the financial sector from negative rates. So I think we're moving around the borders, that what is supportive and what is not. Fiscal policy, on the other hand, what we've seen in 2020 has been extremely supportive for the real economy.
At least short term. I mean, longer term effects might be different. Lippo, you had.
Yeah, and Valtteri mentioned there that we could go back to the growth levels that we used to have, but then what we have there is increased debt. We have ongoing fiscal deficits. I'm pretty sure that we are not going back to the fiscal deficits that we saw earlier, and we are facing even lower interest rates if they can go any lower. So at least difference is that this kind of room to stimulate further is always getting just smaller and smaller, ongoing. Of course, it is helping. So going back to the first question there, it is helping, but as Heidi mentioned, diminishing.
And we're locking ourselves in. If we're thinking, what is a big legacy of this crisis, if we're thinking about the economy, it is that the central banks now have given an implicit promise to the policymakers and the finance ministries that if you build up debt, we buy it. And I think this is something we're not going to get away from. So we're taking big steps away from independent central banks, which is quite a new innovation in that sense. But will make also monetary policy much more difficult in the future because they feel that they have a responsibility also for public debt in a different way than before. And that's very problematic, I see.
So we're talking about fiscal dominance. Yeah. But I mean, didn't this already happen after the great financial crisis?
Partly, but it was not so coordinated.
Okay. The fiscal dominance is we do have always in the financial industry these sort of a pair of words or words that you will see like a lot of things, and I think that is a pair of words we are going to see way more in financial press. Just on Europe, that I mean, ECB is doing the best, I guess, on trying to support the economy by doing QE, holding negative rates and so forth. But I mean, purely, are there any sort of areas that you think Europe, with the help of the ECB, might be a sort of in a better stage or better shape than other areas? That is there any? Are we really so pessimistic? I have a question here that states that in Europe IT and personal data regulation and stuff like that might be in better shape than elsewhere in the world.
Lippo, you want to take this one?
Lippo.
I was so optimistic on Europe. No, unfortunately, I can't be that optimistic on Europe on anything. Basically, I think for some degree it is more about survival in Europe, unfortunately, and for ECB, ECB is the one that is holding Eurozone together. And kind of from overall perspective, yes, we need to keep the Eurozone together, but unfortunately, we are in a spot where we need first ECB, and now we have this debt that we are kind of dividing or carrying for each other. So as long as Europe is kind of or has to concentrate on surviving, we can't be really leading on the positive side, unfortunately.
But as I see it, Europe can lead with values and with ethics, and that's where we are leading right now. It might come a change, and the US takes back that lead. But also in the green questions, in questions about income equality, which is seen by young people in the world as the biggest problem that we have in the economy. There, Europe is actually leading. And if you talk to American economists, they see that as a huge problem, and that is something we have in a way solved here, but we're paying a price for it. But that is something where we are actually leading, where I guess Asia is also going to look at us, how did they do it, and trying to figure out how they can do a little bit the same as what we have done, but not pay with economic growth.
I wonder though that in the Chinese diaspora, if they really look to Europe for value leadership, though, I think they have quite established long-run thinking about how the world runs and what are the sort of values that govern action and so forth. I doubt that after 5,000 years they're going to look at Europe and say, really, we did it all wrong. Confucius was wrong. Actually,
you might be right that we, of course, look it from the European or Western point of view, that our values might be a bit different. But there's a huge snowstorm even by Finnish standards out there currently, and all of you guys, except Lippo, were here in time. So I mean, it only shows that everything works in Europe. I mean, in most of the places, everything works. It's regulated. You can trust many things, which perhaps in some other areas in the world you can't. So maybe this is a sort of a plus side.
Quality of life. People are really happy here. We're the happiest people in the world in Finland, what we question. But in Europe in general, life is considered to be good compared to other parts of the world, and that's where we can lead, of course.
Now that we are sort of, as you pointed out, that we are probably moving better when it comes to growth and so forth, but there are some areas like, do you have any views on will, for example, low-fare airlines or cruise lines or similar will or tourism altogether, will it be the same ever again?
No. At least for not for a long time.
Okay.
Maybe it's again too early to say never, but it will take quite a few years to go back. It's first our attitudes when we decide that okay, should we travel? Maybe late this year we will all be traveling wherever. It doesn't matter as long as we get to travel somewhere. But then further out, and then for example airlines, we are seeing these cheap airlines going bust now. So I think that this time for the cheapest air tickets is gone, and also business traveling will be cut massively, probably even more than tourism. Yeah. So there are kind of these permanent changes, but of course we will adapt to this. So where we'll end up exactly is difficult to say, but that's kind of easy to guess that there will be less traveling.
So there is one thing that has sort of a semi-permanently changed perhaps. Also earlier there was already, at least in Nordic, there was this sort of you shouldn't be flying because it's pollution. Take the train instead or stay home or travel domestic. So there might be of course areas that have sort of at least semi-permanently changed.
Well, I mean, some of these things were already occurring, right? I mean, there was a lot of talk about reshoring, where this idea that you could carry out professional services. So, for instance, an Indian doctor could look at your X-ray. Why would you send that here?
So maybe the European trustworthiness comes up there.
Yeah, but I mean, I'm just saying that in a way, the corona crisis was like a catalyst to pre-existing trends, right? Yeah. So these aren't new things. It just speeded up things that were already occurring. Sort of a level shift in that process that was already occurring.
And this probably was reflected to say IT share prices or FANG prices that actually it only increased the sort of idea of these trends going forward. Already we discussed a bit or touched the huge support that there is currently for the economy coming from mainly from fiscal support, lesser so from ultra low rates and QE. But what comes to markets then? These factors are supportive for the markets, I guess, but say if there wouldn't be these supportive factors, equity prices have risen quite a lot since great financial crisis. That how do you see that I mean, where equity prices would be without this support? How much lower would they be from current levels? Lippo, if you start here.
Yeah, I've been asked this very interesting question. Would equity be lower or higher now if there wouldn't have been this pandemic? And to be honest, I don't know. As we know that earnings have collapsed depending on which region you look at, but overall they are down and equities are up from even the top that we saw last year. And of course this stimulus is major issue there. Of course we have to remember that it is not just stimulus, and it's not just valuation that is driving or has been driving the market for the past 10 years. Also, companies are doing extremely well. So overall, economy or globalization, digitalization, and so on, they are all kind of helping, especially companies. So companies have been the major beneficiaries there, and that's why earnings are higher than ever. As well, they are not higher than ever as they are due to this pandemic, but overall, companies are doing very well, and then other issue is that people are willing to pay ever higher prices, but of course that is impacted when interest rates are non-existing more or less, and kind of that is one thing that changed here in pandemic. In Europe, we are used to this zero level. Now I think US is kind of has said that okay, we will have zero interest rates going forward as well, and US is where the money is. So that's very big driver overall on this. So we have both support from companies' earnings and then this massive drive for yield hunt that we are seeing.
Valtteri, what's your point on that? How much equities would be lower without the exceptional support from central banks?
I think they'd be devastated, but I think it's not. I think it's a nonsensical question in the sense that if you had that kind of shock, to equity markets, and you wouldn't have, let's say, central banks rushing in. That wouldn't have something else would happen, right? There'd be fiscal policy coming to the rescue, or there'd be regulation saying stock markets, as they do in China, can't fall so and so much, or we'll just shut the market down. So I'm saying some sort of reaction would happen as a result of this sort of, impending doom. So in that sense, I just don't. That's why I don't think it's interesting. But obviously, it's been pivotal, and it probably was the most efficient response that we could use as a society to stop. I mean, I'm sure there's something else, but a lot of really smart people have been thinking about this. I'm sure they would have come up with something else. So that's just what I mean. I mean, yeah, I just find it hard to believe that with the vested interests we have, that somebody would allow that kind of free fall and destruction.
So basically what you are saying is that there is this official support for the equity prices. Yeah. So equity prices are currently so important that they are not, basically they are not they are not allowed to fall.
But if you remember how central banks were born, their role was lender of last resort, right? That was their monetary policy. It wasn't to do 25 basis point hikes or cuts. It was there to save the financial system in case there was a bank run. I mean, this sort of situation with equity markets is actually quite similar, isn't it? It's just not banks collapsing. It's just, the economy collapsing for another reason, and central banks being, supporters of last resort. So that is their sort of primordial initial, that was their function in its origin, with Riksbank as the first one to emerge.
Someone will have also questioned that points to that direction. That I mean, isn't this a form of socialism? That central banks in some Japanese central bank is the biggest equity owner now. It even went over the earlier. I guess it's the local postal. Fund anyway. So I mean, is that right or wrong for central bank to buy stock? I mean, won't it end like that actually the official sort of public sector will own all the companies and so forth? What do you think, Heidi? Is this worrisome? Do you sleep well thinking of this?
I always sleep well, but I would somehow, I don't know if you can say is it right or wrong, but it's really worrying, I think, that the role of the whole public sector in our economic systems right now, because it doesn't match the idea we have of how the economic system should work. It has somehow creeped up on us and shouldn't be there, but it has been like through different crises we've ended up in this, and that's always how policy evolves. And at some point you are in a point you don't want to be anymore, but you can't back out, and that's where we are going. We're one crisis at a time. We're going further away from what we somehow implicitly had decided together, that this is the kind of system we want. Now we're quite far from it, and the US is very much nested into it, even though they still have the perception that they are living in a much more capitalist system than we are, but they have basically taken the bad parts of the socialist, if you want to use that word, system, but they didn't take the welfare state. That is, I would say, the good part of it. But I see it as a big problem, because regular people and voters see that they've been cheated somehow, that this was not the system we decided on, and it's been basically just impossible choices that our politicians and central bankers have been put up to, and they just acted in the moment.
Okay, let's move just back to the markets part. That I mean, when earlier I asked how positive or negative you are when it comes to economy, but what comes to equity prices, I'm not going to ask you that where S&P index is going to close this year. I mean that is silly, but I mean, overall feelings that I mean, are markets going to be higher end of this year or lower in equity? Obviously, end of the year is an artificial cutoff point. So I mean, it's more like sort of your feelings and kind of your attitude towards markets. Lippo, positive or negative?
If you are positive on economy, basically you should be normally positive on equities as well. The problem is that we are all positive. We are positive on equities. We are positive on economy. So quite a bit is priced in, and kind of short term, I'm worried because it's just exaggerated.
Short term, like a couple of months or
yes. If we think about kind of Q1 or something like that, we should have some correction Unfortunately, there are many people waiting for that, so that's maybe
makes it hard to happen.
Yes. So that's the problem. And on the other hand, as we are so far in this system where central banks come to rescue, governments come to rescue, we all are counting on that okay, if there would be, if this kind of recovery from COVID would be worse, if we would have massive bankrupts, then we are all saying that, okay, it doesn't matter because then we will have governments bailing out everyone and central bank bailing out government. So we are very much in this kind of ongoing system, and that's worrisome because it's not normal markets, but it can last for long. So for overall this year, yes, I am positive on equities, not as positive as one could be from the point of view that economy will be jumping so much or growth will be so high because so much is priced in already.
If you would have to choose that which is the bigger factor, the special factors currently, fiscal support, ultra low rates, or the growth? I mean, this is the traditional way, but I mean, which one in your world has bigger weight for this year? That is
overall, looking at history, it's every time that we have had major crash on equities, there has been a recession. So kind of economy is saying the overall direction. Then we have this stimulus that is saying what is the kind of speed there. And there I would say that we are more or less 50-50 from that point of view, that okay, there's so much good price in, but at the same time we still have so much money that is looking for yield. So it is both.
Okay, so 50-50. Valtteri, equities going up or down or sideways?
Well, I guess sideways is a zero probability event, but like, I'm basically along the same lines as Lippo. Just one point, if I may, just what Heidi was talking about. I just had this.
Socialism.
Yeah, socialism. Thank you. But
I thought so.
Yeah, okay. Exactly.
That's the American word.
In a short comment there.
Yeah, what you're talking about just reminded me, because I have some academic friends and they can be quite abstract. I was thinking, why is it that we're so, and I do agree, it feels funny having the central bank buy equities outright. But and there's this uncomfortable sort of devil's pact where, it's a market economy supposedly, but you have one agent, the central bank, that manipulates prices, and they're not determined by market action. But isn't it exactly the same thing with interest rates? I mean, normally you have interest rates go up and down as bonds are bought, but then the central bank. So we've always been that. It's always been that way, and I'm sure 400 years ago somebody said, "This is crazy. We have a central bank that's manipulating short-term interest rates. This is diabolical. We can't have this." But now it's completely normal. So one part of market manipulation is completely normal, and the other one, this part normal. So I'm just saying it's quite. I think none of it is. We've never been in a complete free market, or we were, but it was 500 years ago.
And equity markets going up or down?
Yeah, I mean, but I have very little to add actually to what Lippo said. It's the same as the world is the same as it was before Corona. So I think the chief, the source of concern is basically valuations. So and particularly now, I think things look so good that it's more valuation is really, so everybody is, it's flows, it's positioning, it's valuations that are problematic, because everybody agrees that the world looks quite bright, and we're going to go up. I mean, the conversation has already shifted to the Fed already starting to taper. I mean, that's what the conversation is now. Will it be, that the second half of this year, beginning of next year? I mean, I think that's where the conversation is moving already.
So basically they are saying that if they would taper that it's not a normal state of things that they buy 120 billion every month. So there isn't any normal in that actually. We have to accept it, but is it normal? Heidi, do you what's your feeling on equity markets? Do you have any sort of a...
Pretty much the same here, that high probability of just continue going up, but of course always when everyone expects that there's a risk of bigger corrections as well, but it's a link to all the other risks. And of course we have the situation where the faith in the system and the trust that we have is if something happens that makes that a little bit, that the markets start to question what central banks do, that does it really work? then we might be in for big trouble.
That would be really major, having implications, and it's same with the inflation. Let's not go into that, but anyway, it's based on trust and stuff like that. On equity markets, is there any geographical favorites that, or is there any difference? You seem to be bullish, but I mean, is there any specific favorites that you would like to name?
Yeah, of course. When we are saying that equities are expensive from historical standards or absolute PE levels or whatever you look at, it's the US. That's really where yes, they are not cheap anywhere, but US is by far the most expensive. And also within US, you have to remember that it is the growth companies, it's the banks and so on. So if there is kind of some normalization in the people's thinking, then we would stop buying all the hype products, then it should be US that is underperforming. And also we have the dollar issue there, that consensus is again that dollar is depreciating this year. So US is not as attractive as it used to be.
From a European investor point of view,
yeah,
the currency
the problem of course is that, as you might have noticed, I'm not too positive on Europe. Europe on economic side, so maybe it could be also translating to the companies and earnings side. So then it comes to these emerging markets, and as I said, that I believe in China overall, and if the world growth is picking up, then emerging markets should be the ones who are benefiting the most. Again, problem is that that's quite a consensus, but consensus can be right until everyone is agreeing.
Valtteri, did you have any specific recommendations, or not? Recommendations are not allowed.
Yeah, but I think you're trying to get me put in jail or something. What's going on here? But yeah, I was wondering that I think geography is a bit passé to be.
I know, it's old school.
it's old school, precisely. But yeah, so maybe some sort of value growth rendition is more appropriate. So
yeah.
I think that's trickier. So this geographical thinking, I think, is mostly, and maybe that's sort of sort of hidden closet growth value, and that's also like, if you want more or less beta, stock market beta, you go to EM, and Europe, if you want more bang for buck, and US is more defensive. But I think the growth value is interesting because of this. There is this tension between the sort of short and long run, in the sense that long run, if you subscribe to the whole secular stagnation view, so it's low rates, low inflation, low growth, then you think growth is going to outperform, right? But if you believe in this year and this rapid bounce back, and rates going up and so forth, then you want to go for value. So actually the two time horizons contrast. So this year, yeah, I think value could outperform a bit, but I'm definitely in the growth camp in the long run, because I subscribe to that secular stagnation macro
so
view.
the trends being there and supporting the growth.
Trends.
Right.
Yeah.
Fixed income and rates altogether, interest rate levels, we are all quite fed up with the rates being so low, and really it's difficult to find any sensible investment in fixed income universe. Is this going to change, Heidi, anytime soon? I mean, markets is not expecting ECB, for example, to raise rates in, I think, 6 years or something like that.
I would say not in Europe, but Norway maybe being an outlier. But otherwise, we have to look again at emerging markets, and the US talks about tapering already. So these ultra low rates in the US might be a short-term phenomenon, but high rates, no.
No, yeah. So that's this makes really difficult for a diversified portfolio's life, and there's plenty of talk of that does fixed income investments have a place nowadays in a diversified portfolio, because they do have duration, i.e. interest rate risk, and rates being so low that you don't get any running yield to compensate for the risk. So is there any idea of owning fixed income investments currently, and if so, where should you have your fixed income investments? Heidi named US and emerging market fixed income. There's some currency risk, or quite a lot of currency risk there. So
yeah, maybe we are the old school guys, or I am actually. So I think there needs to be a lot of debate on this. going forward, because we are not now in a situation where there is no yield. You are not getting anything from government bonds longer term. You are not getting basically anything from investment grade corporate bonds. And of course, this has been driving all the yields down further and further. But kind of what is their role in portfolios going forward? It is a good question. And increasingly, we are in a situation where everything is correlated. At least when there is something bad happening, then even especially in Europe, where we are actually the government bonds are, half of them are Italy and Spain and so on. So they are not risk-free from our thinking point of view. So yes, German government bonds are the insurance in the portfolio still. I believe so. And they will outperform everything if there is really big problems. But otherwise, what is their role? I would say it's diminishing. It is there still. You should use them, but everyone is now questioning how to kind of replace those, and then you are looking for alternatives. Real estate is very hot stuff. Everyone wants real estate because it seems kind of freelance at the moment. Prices are only going up and you get rents and so on. But can it be that easy? So maybe we should face another crisis before we can really answer those questions.
Valtteri,
again, it's just a bit hard being after Lippo because it's.
You have to speak.
I promise to take you first next time.
No, it's fine. I think I definitely like if, in terms of if you want to have high returning portfolios, then you should have a low weighting on fixed income, no weighting at all actually if you can avoid it really. Lots of agents have to invest into for regulatory reasons. But other than that, given that you're not getting a return, and I find it hard to justify certain fixed income positions. So I think for some agents it makes sense to either go for alternatives, as Lippo talked about. I think some of this stuff is actually quite just self-explanatory, like the correlation in housing in Portugal and Spain is not as high as the stock markets, for instance. So there's actually, you can lower volatility quite a bit if you diversify real estate. But you could just do other stuff as well. For example, puts, equity index puts, for instance. Why not? There's no correlation risk there whatsoever. You'll get a return if the equity market tanks, if you want to diversify, for instance. So you could also just use strategies. You don't necessarily have to go into other asset classes.
So
if you
basically
want to
generating extra income by selling options, for example.
I was thinking about protecting portfolios, but yes, that as well. You could, exactly. You could also sell, but I'm just saying, because in fixed income it's difficult in that sense, that because it doesn't really provide any running currently in euros at least, or it's increasingly difficult to find any paper that yields positive return unless you go really deep in the credit spectrum, of course. So this is an ongoing problem for a lot of investors, and probably a reason which is supportive for the equity market. So if you want to sell your equities, where do you put your money? Well, fixed income, so and so. It can be a parking place, of course, for short term and so forth. Well, then I'd like to, in favor of time, to move on more soft topics. What comes to your own investments, that maybe you save money for your pension or just otherwise keep something for the rainy day. That would you like to share, Heidi, if you start that? I promise to start, Valtteri, with you, but I'll go to Heidi anyway.
My investment strategy is more interesting.
Would you like to share a bit if you save any money or invest money yourself, do you have any sort of a philosophy or what you're thinking?
It's quite boring in the sense that just regular investments are in some standard funds working with the job I do. It's very regulated how I can act and what I can own and how I can trade. So it's very, very static in the sense, but a very traditional buffer. But I'm married to an entrepreneur and that's where we have the risk. So most of the extra money always tend to be canalized into his more or less crazy projects, and we always
so it's quite automated in that
yeah.
sense.
So we've always
it's an alternative.
yeah. So exactly. We've always thought that I make sure we have food on the table, and he makes sure we have the risk and diversify it according to his preferences. Of course, I have a little bit to say there as well. And then we have this like wild cards, like art, for instance. Now we have a little bit like African art. We're like betting on rapidly growing countries like Nigeria, where my husband has some other business as well. That when populations grow, like in China, to a certain point, they just have so big populations that they also have a lot of rich people, and at some point they start to get interested in their own art.
Okay.
But those are wild cards. Like you might get one artist that becomes really hot.
Here's a tip for you.
Yeah. So they're like fun things in a sense, and I think it can be fun. Like part of your portfolio can be something fun and passionate
and tangible as well. What about Valtteri?
Yeah, thanks.
Lippo, you need to wait a second.
I just agree with you.
Yeah, actually, we pool investments with Lippo. So it's like, I mean, regulations basically killed my investing because they made it a nightmare. Before that, I used to, I traded options, like equity index and fixed income options, really, option strategies. I thought I did that initially because I wanted to understand markets better as a strategist. And I work closely with the equity derivatives desk.
Right.
So I started trading it, and also single names. But I always did better with indices and options than single names. So
single names being a option on a specific.
Well,
company.
actually, and I didn't trade. I never traded single name options on single names. But I mean, just cash equity single names, right?
Right.
So I always did better on the ETFs and the ETDs. Yeah.
Okay. No, Lippo, what about you?
Don't do as I do as I say. It's maybe my principle there. So I usually do too little, too late with my own money. So that's kind of easy solution there. But nothing special. Naturally investing now into our own funds. Try to look for some interesting kind of themes there. Like now, my latest is that I put money into new frontier markets. I said I'm positive on emerging markets and kind of looking at something else than China there. But then have some single Finnish names. Doing every now and then, I also have pretty clear restrictions what I can do and cannot do. But of course, I said in the beginning, should do more and earlier, but I'm pretty analyzing too much. Don't think too much. Work with your instinct is better than kind of keep on thinking that, okay, is this perfect? Because, well, we all know that perfect is something you never achieve.
No. Some might claim that they spotted the March 23rd, was it the lows in equity markets this time? But I guess there were not that many that managed to do that. Then I'd like to move into the next question, which is that you all are quite often quoted in media, like TV and media, or papers and social media and so forth. That how do you feel about that? Does that sort of give you additional pressure of being right because everything stays in the net for ages? Someone might find your for example, this video in 10 years' time, where you were positive on economy and equities, and something horrible happened. I mean, does that create pressure that seeing your own name in papers claiming something what comes to economy?
I think it's something you get used to. In the beginning, it was stressful just to be in media somehow, but when you get used to it, it's a part of your role. You're very much aware of that. Most of the time, you're not right. It's more maybe about, and a critique also that you get is, my experience is that you get more about your values. If the critique I can get from viewers, for instance, is that I'm too leftish, according to their view. When someone asks me what I think, but the perception is that bank economists should not be that leftish. Right. But then when you talk to people that are actually leftish, they think I'm really to the right. So everything is relative.
Yeah. So basically, it doesn't mind that you see your name on papers. It's part of your work. So you are sort of managing or coping with that. Valtteri, your turn again before Lippo.
You set this up with Lippo, didn't you? But, yeah, like Heidi said. So first, it was quite nerve-wracking, but so it's about presenting in public, right? So and I didn't really think about something staying eternally. Thanks for that. So now I am a bit more stressed again. And but I remember like the first time, I think I was on TV. My colleagues where I worked then, they continually tried to show me this clip of this unfortunate person who basically froze on live TV, and they repeatedly showed it to me. They're trying to psych me into freezing on TV.
To do the same.
That's what you get for working in a dealing floor. Yeah. So, but yeah, like Heidi said, so now it's you get used to it, especially with repetition. It's like anything, really. The whole, and I'm obviously not as much perfect as like Heidi, for example, on TV and stuff. And I still wonder sometimes if somebody's staring, is it because they know me, or if I have something between my teeth? So it's, but yeah, at least for me, in an ideal world, I'd rather not be noticed. So I'd be like edited.
Yeah. I'm asking this also because I'm interested on your views there, but also because CFA Society is, of course, contains, or we have a lot of members that some are early in their careers, might be considering about being a strategist or economist for that matter. So I mean, it is something or gives a bit sort of a background.
One more thing, quickly as well. Sure. I was thinking about this one day because, this is the time of the year when everybody comes up with outlooks, and then you also have this time of the year when everybody laughs at outlooks about how they'll be wrong, outdated in 3 weeks' time. I was wondering why that is, like why, why. But I think there's actually a really simple thing, and the people laughing actually are the ones who are a bit silly, because the reason is that if you have a consensus, let's say a consensus or like a base case, that base case probability is probably going to be something like 40%, right? And then you have two other scenarios that add up to the 100. So it's always, or generally, more likely that base case will not occur, right? All the other possibilities have higher probability mass than that base scenario. So it's actually likely that it won't occur. You just don't know. But it's of all those things, it is the most likely to occur. But just a very simple. I just thought.
So when I read, for instance, IMF's economic outlook, I start with the risk chapter because that's where the interesting stuff is. Because you have the baseline, but the risks and how you weigh them, how you formulate that's actually the story. So if you look at what the IMF wrote the years before the financial crisis, in each and every report they warned about the potential financial crisis, but it was always a risk because it can't be the baseline. You can't forecast per definition a sudden event that you don't know when it's going to start.
Lippo, do you mind being on media?
Oh, of course, it's part of the role, so kind of you have to live with it and you get used to it. That's for sure. One thing is, I think, good to mention it, there this risk, because you kind of learn not to overstate the risks, because everyone loves risks, and kind of the perception is that that horrible thing is going to happen if you are mentioning it. So you have to be pretty careful there when talking to this wider audience. When I'm talking with one-on-one with some people, my talking is quite different than in news saying that, I see markets could collapse, because some people interpret that, it's going to happen, and then they will panic, and everyone is kind of afraid enough already. And of course, part of my job is to kind of encourage people to invest. And if we only talk about risks and are negative, that this and this could happen, then they will never invest. So I think the best thing is to kind of be at least balanced there. And many times I afterwards think that, I said so stupid things there, but then no one notices. I'm I think they're much more than other people, so it's kind of relief when you understand, they really didn't care what I said there.
Yeah, they were looking at your tie. Oh, you don't even have a tie today. So.
That one as well.
It's, of course, it depends on the audience, and if you speak to private individuals, for example, it's important to save longer term, and it's been a good thing just to save and try to accumulate savings and just hold on to your savings. So I mean, it's also sort of a time or perspective related in that sense as well.
That's true.
CFA society here in Finland and elsewhere as well has many sort of mission or parts of mission, and one of them is to promote professional development, and I mean, this is quite important in that sense that CFA society tries to promote the continuing process of learning more in people in our professional and also the sort of ever bigger professionalism as well. That how do you keep up to changes in, say, in markets, and do you try to learn? I'm sure that you are going to say, of course, but I mean, how do you learn more every day or every week? How do you do that in practice? Heidi.
Well, if I think about my whole career, I've tried to make decisions that now I'm going to focus a little bit on something else. When I feel that now I handle this area quite well, for instance, for me, I started out doing a PhD on labor markets. At some point when I worked at the central bank, I said, now I'd actually like to focus more on housing markets. Of course, everything there was from a monetary policy perspective. Then I said, I want to move from looking at the Eurozone to Finland. And that's what I tried to do in the private sector as well. Ask for new challenges that I don't know enough about that. Could I do that now? And that's
so proactively.
Yeah, and usually your boss says, yeah, that's a good idea. Are you sure? I remember Bank of Finland when I said I'd like to do forecasting for Finland with the big forecasting model. They said that might be difficult to sell because then they perceived I had so strong knowledge in something else that it would be waste of my resources. But I got to do it because they realized that, okay, she wants it, and I'm really happy that I did it because it helps in forecasting otherwise. So just asking for it and pushing it, and it tends to happen.
So you read a lot then?
Yeah, yes. You have to like to read, I think, if you're an economist. Yeah.
No, Lippo, how do you keep your professionalism and level of knowledge on a current?
Of course. I'm working in small house, small bank from that point of view, so I'm kind of covering everything myself, so I must be very much generalist and cannot really go deep into stuff. So what I'm striving for is kind of understanding, and also when it comes to this previous question on talking in media, it's not about that, okay, where I think the market is going. It's more that what I would like is to people understand what's going on, why this is happening. And that's kind of where I'm always trying to understand, okay, I don't really get why this is happening there. And when I then get, wow, that's the logic. That's what I like. So it is very much looking at everything, and Twitter is a great place from that point of view, because you get new ideas there, and then every now and then maybe one article out of 100 or 1,000 you go and read deeper into, but it kind of following everything there and kind of trying to keep up there. And then we have portfolio managers who are more deep into stuff. For example, don't ask me about single equities. I don't know that much about any of those. So kind of have to put your limit there that, okay, I'm doing macro, I'm doing markets, but I'm not really going in that deep into stuff.
What?
Well, yeah, I mean, it's a slow, inevitable process of decay, isn't it, of degeneration.
Pessimism there.
In that respect. Well, if you look at mathematicians, for instance, a lot of mathematicians go crazy or worse, by the age of 40, because 40 is perceived to be the last possible year you'll come up with anything
useful.
Well, I would say useful necessarily in mathematics, but yeah. So, for instance, Nash is one example.
Groundbreaking. Yeah, I think I read that same thing as well.
But it's so that's and that's just a given. So your analytical sort of how quick you are, how fast you process your memory, everything starts decaying after, I don't know, 35.
So you do Sudokus then in order to, Sudoku
Yeah, yes I do, yeah. So
you do?
No, I don't. I know what it is. I don't do them, I just know what it is.
I am 52 and I'm interested on that, keeping playing chess and stuff like that will keep you keep on a sort
I played some chess before, yeah. I was yeah. So no, nothing like that. Like I think I actually spend most of my time doing something completely different. Yeah. So I didn't even want to actually get into economics or markets in the beginning. I liked history, And I read a couple of books, and but anyway, from those I just thought that the economy is really important in determining history, so I'll study some economics, and along the way I sort of thought, wow, this is really actually fascinating stuff. And that's how I became an economist.
So that led to
exactly. So I was like, but it was never intended to be so. But I think the only thing one can do, I mean, it's a question of damage minimization in a sense, right? Because there's so much information, there's so many interesting things, so you have to choose. And like Lippo, I'm a generalist as well, so it's macro and markets, and I'm comfortable with not knowing really being the expert on anything particular. But but I think what is key, if you want to give some advice to people, what I've thought about is that you can fake it only so long in terms of trying to, let's say, like I'm going to learn how to program now, this programming language or C++ or something like that. You're just not going to do that unless. So what has to be the key thing is you actually be interested in what you're doing to have any sort of fighting chance to be sort of competitive and keep on learning things in the long run. Like if you aren't interested in it, then you're just not gonna spend your free time reading about all the wizardry of accountancy or whatever it is that rocks your boat.
IAS 44 standards.
That sounds horrible, and I don't know what that is, but yeah.
Yeah, you don't want to know.
I don't know.
But anyway, so what you're saying, which I'm sure that is exactly right to the point, that you need to have the internal interest on something in order to be good in that one.
Exactly.
So you should really know what you are interested in.
Yes.
For example, for the young people that might be viewing this, that they should really sort of try to understand what they are really interested in.
And I mean, you do know inside, right? You know if you're fascinated or not, right? If you can stay up and you keep on reading some book, then you are. If you look up videos on YouTube on something you're interested, if you're on Facebook half the time, then you're not really interested, are you? Yeah.
No, Heidi, what do you do then? Do you do on your spare time or your free time that do you read like The Economist or sort of a work-related stuff, or do you try to do something completely different to let your brain sort of relax and take it easy, or?
It's a difficult question, what is spare time and what is work, because I read The Economist and the Financial Times and Kauppalehti. Is that spare time or work? I haven't really defined it, but I do a lot of other stuff than work as well. I've always perceived that I'm the person that is most efficient Monday morning early if I had a relaxing weekend, and that's something I realized already when I did Ph.D. that I did most of the work Monday mornings. So that increases your efficiency. So I really, all the ideas come when I walk with the dog and not think about anything particular. Then suddenly I have an idea that I then can execute. So I really need just being. And that's something I realized during the past 5 years. I have 2 kids and now they're a little bit older. They're not babies anymore. I realized I need time by myself. So family, but then also just walking around with the dog is extremely relaxing and good for my brain, so I realize.
Lippo, what do you do?
Of course, this is 24/7 work. We all follow what's happening, and when there's something happening, it doesn't matter what the time is. We just start working on it and dig deeper into that. But kind of, it's more from that point of view. I think Valtteri had a very good point there, that if you have enthusiasm on something, you do it no matter what the time is. And if you are not interested in something, it doesn't matter if you are paid for that or not. You are really not focusing on that. And I think that's very good lesson to learn there, that, okay, think about what you are interested in, and then the way you want to do it. If you want to be the one who's digging really deep into the basis of it, or is it more that, okay, you just want to understand what's going on, or whatever it is, but kind of follow your enthusiasm.
No, if you, Christmas just was that I mean, if you wished any book, was it a sort of a financial markets economist book or something completely different?
I'd say optimal would be kind of relaxed economics or market-related book like Live Poker or something like that. It is about the markets that touches you, but then it is something different and it's kind of relaxing.
Okay, yeah. So basically intertwining these areas of interest.
I got the newest Ilkka Remes book, and I was really happy about that.
Okay, have you read that yet?
Not yet.
Not yet. Right. I think we've spent pretty much the time that we promised this would take, which was 1 hour. Is there anything else that you would like to highlight for this year, 2021, that we perhaps skipped or you wanted to say earlier?
Okay, I could say that what last year taught us is to be humble. We have no idea what's going to happen this year. We have to kind of just react to what's happening, and this year will definitely not go the way we are guessing or the consensus is guessing. So it is kind of constantly moving, and that's the way it has always been, and it will be that way. So
yeah, but even more moving parts, since we also have fiscal policy that probably will be scaled back this year. So a lot of surprises.
Good. Hey, there were a couple of questions. I tried to put them or slip them in here somewhere, but I'd like to thank Joe, Kari, Thinking Aloud, Oskari and Janne for their questions. And one thing I must say here is that if any of you who are not familiar with the CFA Society Finland activities, you can go to CFA Finland, cfasocietyfinland.org internet pages to find out more. Now, I mean, thank you very much, guests. I'm really glad that I had all of you three here with us, and also thanks to the viewers, and all the best for the year 2021. Thank you.
Thank you.